Stocks coming off what was the worst quarter in over 4 years. Pippa Stevens is here. She's got the setup for us in the second half of this year. Pippa.
Hey, David. So despite President Trump's call to unleash American energy, nearly half of energy executives now expect to drill fewer wells than at the start of the year, according to the Dallas Fed Energy Survey. And more than a quarter said their cost of drilling has risen as much as 6% thanks to tariffs. And if oil were to drop to 50, which Trump has called for, 46% said their production would decrease significantly. Now, in the anonymous comments section of the widely followed survey, executives had choice words, including tariff antics have harmed the domestic energy industry. Drill, baby, drill will not happen with this level of volatility. There is constant noise coming from the administration. Increased steel costs are affecting our business, and it's hard to imagine how much worse policies and D.C. rhetoric could have been for U.S. E&P companies. Now, in this environment, there is not a lot of love for the energy stocks. Still, one area that investors have been optimistic on is the gas-focused drillers like EQT, Range Resources, and Antero, since that is seen as a growth area given LNG and power demand from data centers. Guys?
Pippa, I haven't been following this close enough, but do the CEOs publicly echo some of the same sentiments that they did there in an anonymous fashion? Because if not, you kind of look at that and think, God, how weak. If that's what you really think, you should be saying so publicly.
Well, so that's exactly it, Will. So we saw a lot of energy executives were very optimistic when President Trump was elected. They were at a lot of his events, and outwardly and in public, they say they support his policies. But then behind closed doors, there is that disconnect between what his policies are and what it actually means for the space. President Trump has made it a big deal to get oil prices down. He wants that $50 level. And executives has basically said our business is not sustainable if WTI falls to 50. Now, it is important to note that this survey does focus on Texas and New Mexico and also includes respondents from very small, some of those more private E&P companies. So it's not, the Exxon and the Chevrons necessarily of the world. But in earnings calls, we also did hear from people like Diamondback's Travis Stice, who said that he thinks peak shale is now here, given that this model looking forward is not as sustainable as it once was. So, Wilf, to your point, certainly a disconnect between what we hear in public and what we see behind closed doors.
Yeah, no one wants to speak out on this stuff. Did you say, so this hour, the U.S. sanctioned Iranian oil networks, Pippa. We got an announcement from the Treasury, maximum pressure. According to Secretary Bessent, while it has had every opportunity to choose peace, its leaders have chose extremism. They're going to look at Tehran's revenue sources and intensify economic pressure to disrupt the access to financial resources, and that would be oil. Is that a surprise?
Yeah, we've seen Treasury increasingly tighten sanctions on Iranian oil, but of course the difficulty is that all of that, about 1.6 million barrels per day of Iran's exports are now going to China. Some of those teapot refineries are a little bit harder to sanction, but if you look at things like focusing on shipping, insurance, and the financial element, you can start to sanction that. But I think we're not going to see a big response in oil until there's an actual meaningful decline. That has been the resounding comment I've heard from traders, is that they've been burned one too many times now. And so until we actually see supply come offline, there's not going to be a big response in oil prices.
Yeah, to your point, oil lower, both Brent and WTI right now. Thank you very much, Pippa Stevens.